Hello and welcome back to my channel A-Level Accounting Guide. We will be beginning with the new paper May June 2021 variant 3.2. We have also covered the papers before which is February, March and May June 3.1. If you have any problem in any other year, any other paper, you can write it in the comment section below. I will definitely refer to that. Now looking at the question number 1, it is Alan and Brian were in partnership. They were sharing profits and losses in the ratio 3:2. Statement of financial position is given. The non-current assets, current assets, capital account, the current account. So the information is very important. The additional information given below. We acquired the partnership on 1st January. Assets and liabilities were taken over by Z Limited, and the property and plant equipment were 350 and 68,000 respectively. One motor vehicle was valued at 29,000 and another was taken out by Alan. So these are basically drawings that are 28,000 by Alan. Inventory would be 20,000, trade receivable 4,400 were considered irrecoverable, which means bad debt. The remaining will be 30500, and you can also calculate discount received on this amount if there is any. Then you have a bank balance of the partnership would not take over. The partnership would pay 14,400 in full settlement. So we can see there is discount allowed of 600. The remaining trade payables will be taken over by Z Limited at their book value, which means Z Limited will be recording in their books of accounts. The purchase consideration have been provided 500,000 and the breakup has been provided. So we'll do the workings and you will better understand the question. Now moving on towards the realization account, on the debit side, you always record the net book value of the assets. So if you look into the information, we have the following assets. We have property at 300,000. We have motor vehicle at 62,000. We have equipment valued at 71,000 and we have inventory valued at 24,000. So these were the net book value of the assets we have. Now we are going to record any kind of discount allowed, or we have any like bad debt, any expenses like that. So if you look into the information, we do have discount allowed. So I'll show you the working for discount allowed. The working is that there was 36,000 trade receivables, all right, for which 4,400 were irrecoverable. So you're supposed to subtract that and you received a total of 30,500. So the remaining is basically discount allowed. So the amount is supposed to be 1,100 in that case. So you're supposed to write 1,100. So this was the working to show you. These were the total trade receivable. This was the bad debt and this was actually received. So the remaining amount is going to be discount allowed, and that is supposed to be 1,100. Now next up we are supposed to see if there is any bad debt. So we just wrote bad debt, which is also known as irrecoverable debt. So we are supposed to record it here as well. So there are different formats that have been followed. Sometimes in the marking scheme you might say see that trade receivables are written here, trade payables are written there, but I think this is an easier format. At the end of the day you get the same answer, whichever method you follow, whichever seems easy to you, you can follow that. However, this will also give you the right answer. The next thing is the profit share is written there, but we cannot calculate it yet. We will move towards the credit side and we will write the purchase consideration and we write Z Limited. The purchase consideration is given as 500,000. Then we have is, do you have any discount allowed? So we are just going to do the working for discount, received. We have written allowed. We will be doing working for discount received. For discount received, trade payables were basically 15,000 and you received 14,400 in total, which means 600 less of the amount that was due. So 600 is basically your discount received. Moreover, motor vehicle was taken over by Alan at value of 28,000. That will also be recorded. So till that, I hope everything is clear. The next thing that's very important is that I told you earlier as well, that the remaining trade payables would be taken over by Z Limited at their book value. So if you look into the information, total trade payables were originally trade payables were originally 33,000, of which 15,000 have been like paid, for which you got 600 discount. That's something else. From 15,000 you have paid, from 33,000 you have paid 15,000. The remaining is still to be paid, and Z Limited said that they're going to take over the trade payables. Hence, it is the responsibility of Z Limited to now pay their suppliers. Amount is going to be 18,000. I hope this concept is clear, because it was taken over by Z Limited, so they have to pay the following amount. Now it's very easy. We can either calculate the profit or the loss on the realization, and it's very clear that this profit on realization, after the calculation you would get to know that the profit on realization will be distributed in the following ratio, that is 3:2. So Alan and Brian are going to get their share as 3:2 ratio, which is 50460 and 33640. So that was all, and you're going to balance the accounts with the following amount, and hence you are done with the realization. It's a very simple account, for which you only need to know which figure is supposed to be posted where, and then you'll be easily done with the question. You just need to read the lines very carefully. Now we'll look into the C part. This is the final realization account. Alright, now in the C part, they have asked us to prepare a statement showing the final settlement to or from each of the partners. So you can also make the capital account. For instance, you can make the credit and the debit side separately. Also, you can make the statement showing separately Alan and Brian these amounts. So now if you look into this, we have the brought downs available for Alan and Brian as 250,000 and 200,000. You're just supposed to list down the brought downs. In this case, what you're supposed to do is, if you do not have this debit or credit side, you will be subtracting those which are on the debit side and adding those which are on the credit side. So do not confuse the statement with the account. The next thing is that you're supposed to write the current account balances. If you look into the current account balances, 27,000 is for Alan, which is supposed to be added, and 2,500 debit for Brian, that is supposed to be subtracted. If you look into the further information, we made the realization account in the previous part. So we know that Alan took over the motor vehicle at value of 28,000. So you're supposed to record it here and subtract it from his account. The next thing is that you calculated profit on realization. Hence, you will just take the figures from there and write down. Figures are taken from this previous, as I already told you. So these are 5,460 and 33640. So profit on realization is done. Now if you look into the question, they asked us that they told us that they were ordinary shares divided among the partners in the capital ratio at the end of it. So if you look into the question, we get to know that the balances at the start were 250,000 and 200,000, and they're issuing at 1.5 premium. So we'll look at the working. 500,000 was basically, now we're doing working for ordinary shares. So 500,000 was the total purchase consideration, for which 23,000 is basically cash. Alright, that is paid in cash. Now the remaining amount is supposed to be distributed, and that will be in the ratio 4:5. Why? Because you see 477 is what is left, and 250 and this is basically 5:4 ratio or 4:5 in any ratio, and then you're supposed to figure out, it is basically 265,000 for Alan and 212,000 for Brian. So these are the ordinary shares that have been distributed between them, and you're supposed to subtract these because these were on the credit side. All right, and now you're going to calculate the final balances, and that is how you were supposed to proceed with the question. And the last ending balances will be that I'm going to write. I hope this working is clear. If you have any problems or queries, write down in the section below. So now that is the amount that is supposed to be payable, amount that is still to be payable is that we're supposed to calculate. It is 34460 for Alan and 13640 for Brian. So that's all you were supposed to do. Very simple account in which you were supposed to just list down the drawdowns, the current account, the motor vehicle, the profit, the ordinary shares. The calculation is very easy, and then you have you're done with the amount that no settlement. This is the amount that is now left to be paid, and that's it. Now we'll move on towards the next part. So next up is that you are supposed to see the net book value of assets. So that's very clear. The additional information provided you with the net book value of assets. So the property was now valued at 350,000 instead of 300,000. So you're supposed to either list down or add them all and subtract from this. So the property was basically now 350,000. You're going to add all the figures, and then we can actually subtract it from 500,000. all right, so it was 350,000. Then we have the property and equipment at 68,000. The motor vehicle left was 29,000. One was taken over by Alan, the other is worth of 29,000. Then we have inventory valued at 20,000, and lastly we have trade payables that were taken over by Z Limited at 18,000. So hence the answer will be 51,000 is basically your goodwill amount that you were supposed to calculate. It's an easy formula. You were subtracting 18,000 because we take the net book value of assets taken over, which are basically the assets less the liabilities. So that is how you are supposed to do it. So 500,000 minus all the assets taken over minus the liabilities gives you the goodwill amount. All right, we're done with question number 1, and we'll if you have any questions, write down in the comment section below. I'll make the videos for next of the questions in the next video, and you can go see that.